Binani stake sale, and frankly, that is going to be a major talking point. Mayuresh, morning. What do you make of this entire back and forth on Binani? Binani Cement stake sale. Ultratech Cement, when they had the option to bid, they were not interested. The bid was much lower, and now suddenly, after the deal was almost sealed with the Dalmia Bain consortium, Ultratech comes back with a higher bid, and they are also getting support from the Binani promoters.
So again, whatever Nikunj we've been hearing from media and media reports, I think it sounds very strange, but what actually takes place in terms of the final decision obviously rests with NCLT. Obviously, I think the kind of bid that we've been hearing through the media rounds is substantially higher. But again, what kind of hit it probably takes in terms of the capex outlay if the entire bid does go through in the first place in favor of Ultratech is something to be seen. So though we remain optimistic on cement as a play, my own sense is that we remain extremely selective. What you've probably seen in terms of expectations of volume growth for the sector as a whole should compound at a very fast clip over the next few quarters. Pricing discipline probably has started coming back in the industry, so the overall national prices seem to be quite stable at this point of time. And the third angle obviously remains in terms of the leverage that can get created on their balance sheets with utilization levels going up. So with this backdrop, probably we remain selective on cement names like JK Cement and Ramco Cement, where our belief is that this entire story in terms of volume growth, expansion of capacities and leverage with realization growth happening and input cost inflations being taken care of over the next few quarters should probably entail better return ratios. So I think JK Cement, Ramco Cement, Nikunj would be our picks within the cement space.
Okay, I'm just going to throw FMCG stocks at you, Mayuresh. Would you be a buyer in FMCG? The world knows that they're expensive, but does it make sense to back stocks or companies where you know that in the near term you can talk about a 10-15% growth visibility? Because markets have been talking about recovery in corporate banks, PSU banks, infra companies. That demand resurgence which markets were betting on is not coming. So rather than reality and bet on FMCG or consumption denominated businesses? I think we've lost Mayuresh. Mayuresh, that question was for you?
Yeah, was that for me, Nikunj?
That's right, Mayuresh.
Okay. No, so the general FMCG, the general FMCG trend, Nikunj, obviously as a consumption trend, it should show signs of visible improvement, specifically after what we've seen post demonetization and GST implementation. Now, a lot of FMCG players have started improving their digital footprint, along with what they've probably seen in terms of their direct retail distribution footprint. So you're probably going to see a lot more happening in terms of them reaching the rural or the semi-urban areas directly, and a lot of managements have thrown and alluded to this fact. The second element also becomes a partial pass-through in terms of input cost inflation. You've probably seen a few FMCG companies where input costs might still remain elevated. Example, copra prices, where the pricing pattern still seems to be on the higher side. But a large element in terms of volume growth playing out for these companies should be quite evident over the next few quarters. Again, valuations, as you rightly put forth, have always been on the higher side. But I think it's going to be a dynamics both in terms of volume-led price growth, and that probably depends upon the discretionary demand coming back in a substantial manner. And my own sense is that as a lot of Indians start moving up the value chain, and as a lot of these SKUs that these FMCG companies are doing with small packets and small ticket sizes for selling their products, I think you should see significant traction happening on that front. So again, Emami is something that I'll probably like on declines. The wholesale distribution network, specifically for Kesh King, is detrimental, but again, the overall volume growth with the modes that it has created across its products, I think that should hold good over a longer period of time. So I think Emami probably remains one of our top picks within the larger FMCG basket.
But Mayuresh, what about the beleaguered one, banks? Are you still staying away, or do you think at least some of the private banking names have corrected quite a fair bit, the large corporate names, and maybe they could be bought right now?
Morning, Aisha. No, so I think the banking sector, specifically on the private side, will also be immune to the new norms that RBI has put forth, specifically on the corporate-facing balance sheets. So the new NPA norms will obviously entail higher provisioning, and that will probably eat into their earnings prospects going forward. But a large element in terms of how their balance sheet has grown, specifically in terms of retail advances and their capital adequacy ratios, will support balance sheet expansion, and to that extent it offsets the kind of higher provisioning and credit costs from the corporate side. In that bit again, I think the ROEs should show a gradual improvement over the next few quarters, along with expectations of credit growth for the industry picking up, in the private side actually benefiting a tad bit more because of the entire focus of PSUs largely remaining on recoveries and upgrades and probably containing the asset quality mess. Having said that, I think ICICI Bank from the corporate-facing banks on declines is something that we will still continue to prefer based on this premise and on valuations as well. And on the retail private sector banks, we probably still like HDFC Bank, IndusInd Bank, where our belief is that the loan growth, specifically on the retail side, can be extremely high going forward. And with stable asset quality, the return ratio should also remain equally buoyant.
Mayuresh, what do you feel about some of these road stocks? They're trading at expensive valuations, but yeah, if there's one sector or segment in the market which is showing you growth visibility, a hefty order pipeline, that's this segment. One sector or segment in the market which is showing you growth visibility, a hefty order pipeline, that's this segment.
Well, absolutely, Aisha, no two ways about it. The kind of order flows that are coming into this sector is just coming every day. And with that respect, I think the order books have swelled up significantly. So the book-to-bill ratios for a lot of these road companies are substantially higher than what we saw in FY16 and 17. A few of these projects are actually coming through the HAM route, which basically means that the IRRs through these projects can be significantly higher. And few of the road contractors have actually finished their projects before time. So execution patterns are also improving, which means that the kind of ROE improvement that we can probably see on the balance sheet can be substantial. The government focuses on this sector, and I totally concur with Sandeep. I think the kind of revenue growth and the visibility patterns exhibited by this sector is humongous. So a few stocks that we also like from this space would include Sadbhav Engineering, Ashoka Buildcon, and within the road EPC guys, KNR Construction with its hefty order book, revenue visibility, strong return ratios, minimal debt on its books, and working capital constraint at 45-46 days looks to be a very, very promising bet.
Okay, Pankaj was just highlighting in the segment Khabar on the Lal Street that Jaypee Infra insolvency proceedings and an update coming in that, and according to Buzz, Adani Group perhaps is set to be the favored bidder. It seems like lenders are backing Adani. The COC has been backing Adani Group for Jaypee Infra. Jaypee Infra, remember, is yet to deliver 25,000 flats in the NCR region, or rather Noida in Uttar Pradesh, and Adani may complete Jaypee's unfinished flats, it seems. Not Jaypee Infra, but Mayuresh, Jaypee Associates. We've talked about as to how hefty the price action has been in the stock in the week gone by, the fact that the rare enterprises kind of, recognized name is behind the stock now. But would you say there is meat in the story, and is Jaypee Associates a stock that you would maybe venture out and buy into?
Again, Aisha, I think all these stocks have probably been in the limelight because of key market investors coming in. But the overhang in terms of their overall resolutions still remain extremely high. And the criticality in terms of how they are resolved is going to be extremely pertinent in terms of how you value these stocks. The second element in terms of their individual performance itself, I think, it's pretty lackluster at this point of time. So again, I think to highlight what Sandeep was trying to mention, I think it's better at this point of time to probably look at good quality, high pedigree names rather than venturing out into some names where I think the uncertainty still persists and the headwinds can still cause problems in terms of overall earnings potential.